Tailored Brands just came out with first quarter report. The company reported total retail comparable sales up 2.4% and all brands positive in February, but because of pandemic, on March 17 they closed all stores, and on March 20 it closed all e-commerce fulfillment centers in the US and Canada. E-commerce reopened on March 31st, but as stores were closed to end of quarter, company was significantly hit and reported $286.7 million of the revenue, which is fall of net sales of 60.4% compared to the first quarter of last year. That was also 28.2% lower than the average consensus of $399.4 million. Tailored Brands posted an adjusted profit of $29.7 million. The company began reopening its retail outlets in the United States and Canada, and they currently have 44% of stores open. After report came out, stocks in pre-market jumped 22%, but now is only trading slightly in green. To me, probably much more interesting and important than sheer numbers are management plans to handle. Company took decisive actions to manage its cash position and reduce cash outflows in the face of store closures and the deteriorating economic environment caused by the pandemic. They accessed $310 million of additional borrowings from its credit facility, took aggressive actions to reduce and defer operating expenses, capital expenditures and inventory purchases, extended payment terms with suppliers, vendors, and landlords, implemented temporary base salary reductions for officers and employees with a salary of $100,000 or more, ranging from 10% to 50%, and reduced the board of directors' cash retainer fees by 50%, furloughed or temporarily laid off all of store employees, most of distribution network employees, and the majority of corporate staff, while paying both the company and employee portions of health premiums for medical, dental and vision for affected employees. In the second quarter of fiscal 2020, the company sold one distribution center and one owned store for total net proceeds of $13.4 million. The company will continue its efforts to manage its liquidity during this phased reopening process. As of June 5, 2020, cash and cash equivalents were $201.3 million, excluding $93.5 million of restricted cash. In report, they state that reading key employees may have a material adverse impact on our results of operations. They also state in report that the extent to which COVID-19 impacts our operations will depend on future developments, which are highly uncertain, including, among others, the duration of the outbreak, new information that may emerge concerning the severity of COVID-19 and the actions, especially those taken by governmental authorities, to contain the pandemic or treat its impact. As events are rapidly changing, additional impacts may arise that we are not aware of currently. If the effects of the COVID-19 pandemic are protracted and we are unable to increase liquidity and/or effectively address our debt position, we may be forced to scale back or terminate operations and/or seek protection under applicable bankruptcy laws. This could result in a complete loss of shareholder value. If you would like to stay up to date about Tailored Brand situation, please consider subscribing.